I just want to revisit what the market as well has settled in at after that initial gap down. We're pretty much status quo. In fact, we've fallen further. We're down over 300 points right now for the index, led by weakness, not just in what you're seeing in the oil markets, but the way it's weighing heavy on the currency markets as well. We've breached that 95 to the dollar mark for the USD INR ratio. 95.25 is where it's currently at. Eternal, Interglobe Aviation, Tata Motors PV, Shriram Finance, Adani Ports, Adani Enterprises, M&M, L&T, Bajaj Auto, Maruti. I can go on with the list of losers. But on the flip side, there's also Bajaj Finance. You've got to doff your hat to those earnings, holding steady with that 2.5% off again. But as is the case with MPhasis as well, that's also sticking by with a solid over 2% of a move right now on the futures. Good going. And let's chat exactly about that. We've got Nitin Rakesh, the CEO and MD, and Arvind Vishwanathan, the CFO, both joining in on the show right now to talk about where they think the quarter is headed next. Gentlemen, both of you, great to have you on the show. Nitin, if I could start off with you, your top line growth, the TMT and logistics were soft. What's the outlook like for the full year now, according to you?
Thank you for having us. I think the guidance we've given for FY27 is high single to low double-digit growth on the revenue. And it's at the back of the fact that we had a record TCV win year in FY26, over 2.1 billion in net new deals, grew almost 68% on a YOY basis. So that gives us a good momentum going into FY27. From a sector standpoint, I think banking and insurance and TMT have all three grown very healthy double digits. Insurance actually grown, upwards of 40%. So again, it's a question of how quickly can we keep converting the pipeline, which itself stands at about 38% growth YOY as well. So pretty good set of deal-making opportunities. AI-led propositions led by the Neo IP suite doing really well. So that gives us a chance to continue to gain share and play in the new spend areas in AI as well.
Nitin, hi. Can you give us a sense of the convertibility of these orders which are happening? Is it happening on a fast pace or it's still slow to convert the orders which you're getting?
I think the environment obviously is very complex. Not only is there a lot of noise around, what the true adoption of AI means, there is also some, evolving uncertainty almost on a daily basis around geopolitics and macro. And of course, those two are interrelated, as you were just talking about oil prices and the currency. So I think the deal-making environment is not simple, but we are trying to lead with the strength of the propositions. The enterprise priorities really are not just productivity and efficiency, but also how to adopt AI at scale that can apply some business transformation or revenue opportunities for them. So I think from that standpoint, whatever deals we've sold in FY26, especially we had a very big quarter in the first quarter of FY26, we've seen conversion of those quite nicely in the later part of the year. And the typical conversion cycle of anywhere from 3 months to 4 months continues to operate, except that when you're deploying a stack that requires you to spend some upfront time and effort, you might see a little bit more elongation. But as such, barring, I would say, a few isolated cases, once you have a deal, I think there is a sense of urgency on the client side as well, because the AI innovation cycle has also created a sense of urgency. And that's, if you play into that, you have a good chance of not only closing a deal, but then ramping it up fast.
Arvind, let me come to you. Get a sense of the sustainability of the kind of deals that you're winning on ground. Is that something that you're looking to do? A 400 plus kind of deal win looks extremely strong this time around.
Yeah. So we delivered, $2 billion plus of net new TCV, and our TCV is net new TCV, right? And that's 60% growth over last year. So clearly the step one of this journey was to strengthen the pipeline. We've started executing in terms of improving the conversions, and absolutely the intent is to sustain this kind of conversion going forward.
And Arvind, give us a sense with regard to margins. Can they hold up? Can they actually get better? You're getting better each quarter. You're going towards the higher end of the guidance you've given, 15.75. What's helping you get there? How much of AI is playing a role in that? Give us a sense. And can you can it continue to improve in terms of the trajectory?
Sure, I think margin multiple things interplaying there, right? So we delivered 15.4% this quarter, or 20 basis points improvement over previous quarter. There's obviously a tailwind of Forex, there is efficiencies driven by AI. But I think Nitin mentioned there's a lot of investment that also we need to do in our platforms, in our go-to-market, to ensure that we are at the forefront of this opportunity, right? So I think there is room for margin improvement, but I think we will still keep it within the range as of now. I think the question is not whether the margins can improve at a gross level, but at a net level, the question really is how much we need to reinvest. And I think we will have to be very conscious in terms of the fact that we will need to reinvest in some of these areas. And therefore, we have kept the range constant. And I think we are comfortable operating in this range.
Nitin, what we are hearing is that the competitive intensity for the big deals has increased a lot, and it's also leading to pressure on margins. And this and the margins expansion, it's offset. It's not even getting offsetted by the currency tailwind which is coming in. How are you seeing these big deals where you're pitching yourself, which is integrated with AI?
I think there are a few things. You have to very intentionally be very transparent with the customer on what the opportunity of productivity gains is, share the gains with them, and then also propose in the same construct the ability to redirect those savings towards AI-led transformation programs. And if you do that, then not only are you able to size the deal up, you also have an ability to not get into this price discounting discussion. So I think this tailwind of AI-led gains driven by transformation is something that we are very comfortable taking to customers. We are very intentional about it. We obviously choose the right deals and the right constructs. And that's given us the ability to stay away from a discounting or a pricing-led wins versus proposition and outcome-led wins.
Interesting. Okay, Nitin, Arvind, both of you, congratulations once again on your numbers, and here's hoping for better quarters ahead. Good speaking with you.
Thank you.
Thank you.
Okay, MPhasis, one of the few winners, of course.